Well, good morning, good afternoon, everybody. My name is Thomas Ryan. I'm the founder and head trader here at Thomas T. Ryan and Company. We trade U.S. common equities Monday through Friday, every market day. And we publish a newsletter which goes out every market day of the year, about 200 trading days a year we put it out. And we'd love to have you join us for a free trial, a 30-day free trial. There's no cost, there's no credit card to take. You can see how we do what we do. In these YouTube videos, I'm going to give you a couple of examples here of how we trade the market. We are trend-following swing traders. We trade on two time frames, a daily time frame and a weekly time frame. The daily trades will usually last 2 or 3 days. Weekly trades will usually last 2 or 3 weeks. So I'm going to show you today an example of one that we just did this week. This is the 2nd of April 2015. If you're following along, we took PIR, that's Pier 1 Imports, symbol PIR, and we went short on this on a weekly basis, although it materialized for us very quickly. I'll walk you through why we did what we did. On a weekly trade, first thing we're looking for is the higher time frame. Well, first thing we're looking for is what is the status of the stock on a weekly basis, as measured by generally a relatively short stochastic. We use the stochastic 5 period, which you can see down below here. This is the weekly chart on my TC2000 screen. This is the monthly chart, daily chart, hourly, and 10-minute. So on the weekly chart, we see that Pier 1 Imports has been overbought and then collapsed significantly back on about the 6th of February. It's in a significant downturn, so it has tried to recover, and this downturn has now turned into a monthly, actually over a year-long downturn for Pier 1 Imports. So what we have is, in 2 time frames, a very solid downtrend on Pier 1 is very obvious here. It has a matching MACD, although this is significantly out of alignment, more than we might like, but in some cases better than others. So in general, we have a declining MACD matching a declining weekly trend. Then we go to the higher time frame. We see, is there support in the higher time frame, meaning the monthly time frame, 4 or 5 times bigger than your trading time frame, 4 weeks in a month. So here we see again a declining long-term trend. This is a little more concerning because generally we would look for trends that are down longer than this. The problem is that you get into longer term downtrends, they very often are getting close to the bottom. So you're making a delicate judgment here as to exactly what the strength of this trend is, and one of the ways to confirm the strength of the trend is that we have a very clear matching MACD. We have the MACD below the signal line for the entire period of this trend. The MACD histogram on this trend is starting to show some uptrend, so we could be approaching a bottom on this trend, but it was also overbought on the monthly time frame. So we figured that this looks like a solid enough opportunity that we're going to at least get 1 or 2 R out of it. And sure enough, that's what happened. So we're in a weekly downtrend. When are we going to take this? When are we going to take this trade? Well, we're going to take this trade right here below the prior week's low, which was right here at 1380. And in fact, we went to 1380. I think it was that was 1383 was the low there. So actually, I think we went 1380 was right in there. And sure enough, what a pain. The stock does a drop below 1380, but then for a couple of days there was no follow through. So we had to sit in it for a couple of days in a losing position. But we held on, and sure enough, the stock ended up collapsing right here. And on this gap down and on this fall down here, which was yesterday, we took 2 R in 1 day. It's a little unusual for a weekly trade to clear 2 times your risk amount in 1 day, but we did. So we're still in the trade. Here's our stop right here. The stop is now moved to break even, and this is 3 R right down here. So we're waiting for 3 R potentially on the stock. We may not get it. We may get it. We will move this stop along as we go. In fact, today we'll probably move this back down to the high of right about in here, which is typically what we would do. I left the stop a little higher up here because of this gap. And stocks will often try and fill a gap. So I left the break even back up here, the stop at break even back here. But we're back into some more profit today on it, and we'll follow stop this down, generally on the prior day's high, maybe a little more generous than that. Stops are a little bit more art than science, but we're going to generally try and stay at or above these daily trend lines in here. So that was PIR. I'm going to show you another one here, which this was a daily trade, which we had a big down day yesterday. And so on the daily trade, what are we going to look for? We're going to look for the status of the stock on daily basis. And on the daily basis, this is IM Ingram Micro. Stock was overbought here, right here. And it was in a downtrend. So we're looking for a downtrend on an overbought situation. So there it was right there. Now we want to find matching support in the higher time frame. In this case, the weekly time frame. So yes, we have a matching downtrend here, and we have a matching MACD here, continuing to show the strength of the downward trend. Doesn't appear to be too much evidence that the stock is going to, in any way, reverse on us. The risk on this one was that we're in a long-term downtrend here on a monthly basis, and we're beginning to approach this 50-month moving average. But we're still far enough away from it that it looked okay. Well, so what did we do? We took IM right here below this low, and sure enough, the stock went all the way down to 24.32, which was I think our 1R target was 24.28, something like that. So we went down just pennies from 1R and did not close 1R profit. Because the stock moved so far, so fast, and almost hit 1R, we'll usually move the stop back to break even. And sure enough, we moved it back to break even, and we got stopped out at break even. Everything was lined up the way we wanted it to. The stock moved the way we wanted it to, but it just didn't go far enough to close any profit for us. And we always hold on to our rules. We never break the rules. We're almost always trading like this in a longer term time frame. Rarely will we ever take anything that looks like some kind of long-term top or bottom. It has to be a matching supporting trend. We're not counter traders. The odds of counter trading success are simply, at least for me, maybe I'm not the best trader in the planet, but the odds of scoring success on counter trend trading it just doesn't appeal to me. There are people that do it; they do it really well, but it's not something that we do. So I like to have a high win rate. I'll take smaller wins, but I like to have a high win rate, which you'll generally get if you're doing trend following trading. You'll get a nice win rate. We're running about a 70 to 80% win rate right now. Daily trade's not as high. The market is very, very whipsawed right now, so our daily trades are not that high. Weekly trades are running about 70 to 80%. I haven't checked it lately, but I think daily trades are running about 50 or 60%. We're still ahead of the market. We're up about 2% on our daily trades. We're up 7% on our weekly trades year to date for 2015, and we're in a down market. So as long as we're making money when the market's losing money, I'm a happy camper. I hope you'll join us. Thomas T. Ryan and Company, ttryanco.com. Head over there, sign up. No credit cards needed. Check us out and trade with us if you like for 30 days. Thanks again.